Now, have you checked your 401k lately? There's a good chance it's actually looking a lot better than it did a year ago, but the experts say looking at your balance too much, too frequently can be detrimental because you chase the assumption that it's going to keep going up. Guys, what is your take on this?
Well, I happen to work with several people who watch their balances on all of their accounts on a daily basis. And then compounding this, they tend to subscribe to these chat boards where they look at their stocks and listen to people. They try to gauge sentiment is what I would say is. And what's happening with a lot of things in the market is there are a lot of people and companies that are short selling the market and they're short selling individual stocks. And so there's a lot of, they call it FUD, which is just made up information that's trying to get people to either sell out or create a lot of disbelief in what companies are doing. And I think a lot of people that do this, their emotions just gyrate in terms of what they feel about their investments. And I think over a period of time, it weighs on you and it gets you to think that maybe you made a mistake and you need to make a pivot or rebalance your account in some way. And in many cases, you'd be making a move before the quote ship comes in on things that you have that really are fundamentally solid.
Yeah, you got to be careful. I do get people that actually send me some TikToks and other videos and stuff like that. And you have to look at, kind of who you're getting your advice from. Mm-hmm. And, trying to develop kind of a plan. So when you're looking at your investments, I would say, 30 years of doing this, the people that look at their investments on a daily or regular basis are absolutely the ones that tend to make more short-term decisions with their money. And oftentimes those shorter term decisions can have a negative impact on their returns. There's been a lot of studies that have been put together that show what those stats are, from making those short term decisions. So when you're looking at your investments and you're looking at what is a good time frame and how frequently should I check my investments, the one thing I'd say is, number one, for long term investors, if you have a 5+ year time frame horizon, a buy and hold strategy can be great. You could probably check your investments more like a dentist office. So every 6 months, looking at maybe what your checkups are. Now that it's the beginning of the year is a good time to kind of take a look at the asset allocation, maybe a good time to kind of rebalance your portfolio. Long-term investors are better suited focusing more on the correct asset allocation of the portfolio than, short-term trying to time the market. You do have more active traders in the market. Those people that are actively involved in the process. I know with some of the strategies that we have, like our Iron Retirement series, we're looking at the markets on a weekly basis, making decisions based upon where the moving averages are of the market, trying to be more adaptive to more current market conditions. That, again, is on a weekly basis with more of an active type of an approach. But the strategy there is referring to more tactical investing, which is designed to try to limit losses overall in a portfolio. And the negative of the active trading is, if we technically get out of the market because an indicator was bad, there's nothing to say that the market won't go up the next day. So that was why active trading can be more difficult in a shorter term basis. But where active trading can be beneficial is to try to, again, limit losses in a declining market. You also want to look at a frequency of rebalancing. Again, going back to, regularly rebalancing quarterly, semi-annually, or annually. I also think it's a good idea to rebalance a portfolio when you have large swings in the market. So like the last quarter of 2023, the market had a really strong rally. It might be, for somebody who's trying to be a 60-40 balance portfolio, might be some time to take some of the gains out of the equities and rebalance it back over into your fixed income part of your portfolio. So if and when the market does have a pullback, then again, you're already rebalanced. The same would be true as if the market has a big decline or a sell-off, using that money and deploying that capital at a predetermined point. The challenging thing about it is, again, we're human beings, so we're driven upon emotions. And so when we see the market sell off, oftentimes we're fearful to put that money to work. So having that fire safety drill ahead of time saying, I'm going to put X percent into the market when it declines 15%. Then when it declines 25%, you're having those predetermined entry and exit points is going to help you remove the emotions of investing and allow you to stick better to a rebalancing program. You can also have a time to review your investments when you have major life changes. So, the loss of a spouse or the loss of a job, those type of things are going to make a reason why you want to reevaluate what your risk tolerance is. What are your goals? How has that impacted your overall plan? Those regular checkups, you can get things like automated alerts, and then reevaluating what your risk tolerance is. So maybe it's been a couple of years since you looked at what your risk tolerance is, and as you're getting closer to retirement time and you want to maybe work towards protecting more of your money, then that would be another reason why you kind of work towards evaluating what your overall risk is. So hopefully that's some helpful advice. And again, I think the key takeaway there is if you're looking at things short term, maybe it's an area that you have concerns about. And maybe it's a concern that you need a second opinion and you just want to talk to somebody about your investments because maybe you're not hearing from or you don't have somebody else that you're working with. I just know here at America's Retirement Headquarters, we'd love to give you a second opinion. At the same time, we can kind of look over your shoulder if you're a do-it-yourselfer and give you some advice and feedback, maybe show you where we think there's some good opportunities for growth in 2024, talk to you about some areas that could be dangerous in your portfolio. And to get that investment policy statement and the review done, all you got to do is just reach out to us. We're happy to help you out.
And to reach out, you can go to the website, arhq.com. You can also schedule a time of giving them a call, 419-794-3030. Once again, that phone number, 419-794-3030.